This is Ask HLB, the series where you have your questions answered by our advisors. We've been fielding a number of questions with a common theme over the past few months: superannuation. What are the changes? When do they take effect? And what impact does it have on me? We've got Andrew Buchan from our Wealth Management Division to answer these queries for you.
Welcome to Ask HLB. Just want you to remember that this is general advice in nature. The numbers, the facts, the names have all been altered. You should seek personal advice for your circumstances. Welcome to Ask HLB. So just the basics on the real changes in superannuation and superannuation pensions from 1 July 17. I always like to tell people, think about superannuation as a bucket. Superannuation income's taxed at 15%, and if you're lucky enough to get a capital gain within super, capital gains tax is 10%. Two ways to get money into superannuation. There's this concept of a before tax contribution. That's the SGC contribution. That if you're self-employed, that's that tax deductible contribution. That's that salary sacrifice contribution. And we call that a concessional contribution because it's concessionally taxed. As that money goes in, you do lose 15%, and there are caps on that. If you're under 49, it's $30,000 this year. If you're over 49, it's $35,000. So there your salary sacrifice, your tax deductible contributions. On the other side of the equation is this after tax money. I've sold an investment, I've paid capital gains tax, I've got an inheritance, I've won lotto, whatever it might be, this is after tax monies. And they're called non-concessional contributions because they're not concessionally taxed. And at the moment you can put $180,000 in via that mechanism. And if you're under 65, you can bring forward 3 years of contributions and put 540 in. These are changing from 1 July. So on this side of the equation, on 1 July, that's going to go to $25,000 for everyone. Few changes with that, which we'll have a look at, because nowadays, if your employer puts in $5,000 of this and you'd like to put in $20,000 and get a tax deduction, even if you're employed, you can. So there's a few changes around these concessional contributions. I forgot to salary sacrifice during the year. I'm in May and I want to make my contributions up to the $25,000. Can I put the money in and claim it as a tax deduction? Yes, you can. So some really good tax planning can be done around this $25,000. Unfortunately, on the non-concessional side, the after-tax contributions, these are also changing and being reduced. The $180,000 goes to $100,000. The bring forward, which is 3 times that amount, reduces to $300,000. So in terms of putting money into super, they're the changes from 1 July. A massive change on getting money out from 1 July, and that is, if you're lucky enough, have a pension, and that's why we have super. I accumulate money in the bucket for when I retire, and then I can come along and put a tap on this bucket. So I can start to get income out. This is great income. If you're over 60, this income is tax-free. And if you turn your money on, if you put that tap on and turn it into a pension, those tax rates inside the bucket go to nil. And this is why the government wants to just restrict how much you have in this style of bucket. Because your capital's in a nil tax environment, and the income you're earning if you're over 60 is also tax-free. So they're sort of putting a cap on this bucket, and they're saying if you've got more than $1.6 million, you can't have more than $1.6 million in a pension from 1 July 17. So there's a bit of planning that needs to go around that. If you do have more than 1.6 million in super on 1 July in a pension from 1 July 17, you can leave a little bit of that money in super but you can only have the $1.6 million in pension. So there's a little bit of planning, a little bit of thinking that you've got to do. You may want to take that money out and invest that in your own name, because of the marginal tax scale, it might be more effective if you've got more than 1.6 to have that money in super. So they've introduced this $1.6 million cap for pension. And then moving forward, they're saying, well, if you do want to put a non-concessional contribution in, and you've got more than 1.6 in super, you can't do that as well. So they're really restricting how much money you have in super to around that 1.6 in today's current dollars moving forward. So basically, the changes from 1 July 17 are based around three key things. The non-concessional contributions are reduced. You've got till 30 June to use those numbers there. The concessional contributions are reduced again from 1 July. You've got these numbers here that you can use up until 1 July. This $25,000 post 1 July 17 is very flexible, a great tax planning tool. And then if you're in pension phase, you've got a little bit of work to do if you've got more than $1.6 million in super. And that's in today's, that'll be on 30 June 17, what is your account balance? And if it's more than 1.6 million, you've got a little bit of tax planning, you've got a little bit of planning to do, and you should seek advice. So there's the three changes. Ask HLB, it does get a little bit more complicated. Ask us if you've got any other questions. And remember, this is general advice only. Please seek specific advice for your circumstances.